Let's go to Al Nuckman, who I know is not going to be here in Chicago because he's been, there it is. I don't want to see that shot. Come on. Alan.
The sunshine
killing
in
me.
my eyes.
You know, you've lost your Chicago street cred when you bail out during the winter storm, okay? I don't care how long you've been here.
No. It's timing, and I timed it pretty well, I must let you know.
All right. How about timing NIKOLA, Alan? You want to buy the worst EV company in the market the last 3 months?
Yes, but let's get to something else first. I did make a little bit of a mistake. We exited Twitter before the earnings. The Twitter play that we did 2 weeks ago with you did make, our target, our 100% target. So you can't complain about that.
Okay.
Sometimes you leave money on the table, and that was a big one.
Okay. No one ever goes broke taking profits too early. Right? Something like that? All right. So what makes you want to go to NIKOLA when you could buy a NIO or a Tesla?
So we did NIO here last week and had a nice surge and ran it to 65, and the option gained 50%. So I was looking at the charts here, and I'm seeing some money flow go into this company. This is stock that's been stuck between 15 and 30 for 4 months. Now, that target's 45 on the upside. I know nobody likes the fundamental story, but sometimes the stock gets bad enough to buy. And this stock was at 90 in June, and it's already up 60% off its extreme low in December.
Okay, so you're buying something here that's off the lows. It's got a little bit of momentum. Alan, I also see, though, a pretty stark series of lower highs on this thing that stretch back about 8 months.
Yeah, so it's got a little bit of a hurdle ahead of it, but from a mathematical standpoint and a probability standpoint, it's something I'm very comfortable with. Looking at the 1750 call, which is deep in the money, as a strategy is for me. It's got a 75 delta, and it's got 2 months of time. Now, the April option, the April 1750 call, is going for about 7. It's only $75 more than the March option, so it gives you an extra month of time for development here. And I like the way this is set up, as we've seen here in NIO, Twitter, Apple. So this continuation of this setup has got me very encouraged, and we'll see where she goes here. You're long from 1750. I can live with that. I'm not getting long NIO from 75. I'm getting long NIO from 1750, given my my right to buy at that level if I chose.
Gotcha. Okay. So 17 and a half strike calls, obviously well in the money already. You're going with your approach here to see if the stock can move a little bit. You don't have a fundamental view on the company, I am assuming, as always,
no,
right?
I don't even want to have a fundamental view on this company because anything I read is not positive. So,
okay.
I'm looking at the big picture in the macro market. You've got to find stocks that haven't rallied yet. We've got a lot of things that are really contributing to this next leg higher. We talked in November. That was the biggest thing, was crude oil breaking out. That was a barometer of good things to come, and that was bigger than the stock market coming back. And now that the dollar's testing that 90 and the VIX went below 20, we've got a lot of things. Optimism wins, and if you haven't been long, you've been wrong.
Okay. Hey, Alan, overall market, is that still going to be the case here? We've got froth building upon itself, melting higher. Does it ever stop?
Market meltup. Well, 4,000 was a technical target in the S&P that we've had for a long time. So every time the market sold off in history, it's rallied back the distance of the drop on that old top. So let's see if we can do that again. You can't call quit on this market ever.
Okay, every time in history, but sometimes it takes like a decade.
Well, we've got time.
All right.
That's the point.
Okay. But you're not buying. Are you buying S&Ps, Alan, too?
I've been long S&Ps for a while, and so it's just a play. I mean, if you look at the NDX, the 14,500 was the target on that, so we still have more upside in the NDX. And what we've seen here is a lot of the big tech stocks haven't kind of led this leg, and the earnings are coming out fantastic. I know it's an overload of too much good news. That gives me a little bit of caution, but that's why I look at plays the way I do. I have limited risk options. I'm paying a very small premium in comparison to buying the stock. I'm buying time. I'm going in the money, and a modest move in the stock. You get a 50% gain or a quick 100% gain like we did in Twitter and Apple. That's the game I'm playing. I'm not saying load up and hold on for the next 10 years and put these stocks in a drawer. I don't think you can even get the certificates anymore, but you can't do that. And this market environment, there's still going to be tons and tons of opportunities.
Okay. All right. I'm letting you go on. I'm tired of seeing your shot. Appreciate it. Thanks as always, Mr. Nuckman, Chief Market Strategist at Agora Financial. Enjoy it out there. Get rid of it. I don't want to see the desert. No more Arizona or Florida. None of that. All right. When we come back, let's get some charts. We got a great guest coming up. We're going to get back to a macro conversation here. The backdrop for stocks, weaker since the open.